Hello, Jupiter. Welcome back for another installment of your favourite analyst, me, the Gillionaire, with the long awaited video on the theories of W.D. Gann. I'd like to first apologise for the time it's taken me to produce this content. As you can probably tell by my voice, I haven't been the best lately, and I've been putting this back and back until my voice came back, but sadly, it hasn't happened yet. So I thought, fuck it, let's just do it anyway. I think you can understand me. I probably sound a bit croaky, but other than that, nothing wrong there. So here we are, the man himself, William Gann. Something I've been teasing the community for a little while now, for this point, to bring this to you guys, his theories, my interpretations of his theories, and some really interesting, really life-changing stuff to add to your trading tool sets that I have created and derived from the works of Gann, and could hopefully bring you guys some extra monies, extra gains over the next few years or however long you do this. So gonna get right into it really. First, start by telling you who Gann was and what he's all about. So, Gann, William Delbert Gann, was born on the 16th of June 1878 in a rural setting on the outskirts of Lufkin, Texas. At the age of 25, Gann relocated to New York City, and in 1903 he gained his first job working at a large brokerage house on Wall Street. In those early years, he developed a strategy to make profits rooted in the sound principles of understanding price patterns, technical analysis, and most importantly, risk management. No emphasis on that one, guys. We all know about how risk management is key, regardless of what systems we have. While integrating these essential foundations into his profession, Gann developed a desire for deeper insight into exactly how and why market patterns and certain numbers repeated cyclically throughout time. As I'm sure you guys have come across, you've probably seen fractals and psychoanalysis. Well, Gann was all about that. He was big on that kind of stuff. His motivation to learn more about these cycles led him to the study of the subjects including natural philosophy, vibration, number theory, sacred geometry, and astrology. Interesting stuff. Now, Gann, on August 8th, 1908, after establishing himself as a renowned trader, he made his most significant discovery in the market forecasting. And after many years of dedicated research and study, Gann then promoted his forecasting abilities to Wall Street in the famous Ticker and Investment Digest interview with Richard D. Wyckoff. Now, I'm sure you guys are all familiar with Wyckoff and his theories on supply, demand, accumulation, and distribution. One of the greats. Gann was there at the same time as Richard Wyckoff, and they both pioneered two different styles of trading theory, but notably today are, well, more Wyckoff than Gann, far more than Gann, very much used and appreciated as excellent theories on how to trade markets, how to spot where the big money is acting and playing and moving the market around. Anyway, during this interview, the Ticker Investment Digest interview, Gann empathetically declares that the essence of his years of study and market forecasting abilities are firmly rooted in the understanding of the universal law of causation and harmony. He also stated in candid terms that everything in existence is based on the exact proportion and perfect relationship. Bit of a kind of yin and yang theory, you know what I mean? So a lot of cultures around the world kind of believe in this sort of stuff where one balance or out of balance is balanced by another element or aspect. And he then went on further to mention that there is no chance in nature because mathematical principles of the highest order lie at the foundation of all things. Now, Gann, he was noted for this sort of stuff, thinking pure maths, pure, how can this be quantified? Hey, it can't be random. And that's what he spent his life doing. So further into Gann, as part of this sort of foundation of Gann's ability and the most famous thing that he did, he employed an auditor hired by the Ticker, and he demonstrated his forecasting proficiency by producing 1,000% returns with 262 out of 284 successful trades over 1 month of trading. which is an astonishing 92% success rate. Honestly, guys, this is true. This happened. He was basically put on the spot, proved his trades, traded them. This was his success rate. And yeah, he basically walked away with 10x. On a traditional market back then where leveraging wasn't really possible, they didn't even have computer screens, they didn't have charts in the same way we have. They had paper charts, they had to read the ticker tape to work out what was going on in the market. So this is pretty astounding stuff for the time. Anyway, this incredible master remains a beacon for those seeking to uncover the deepest secrets contained in the more complex levels of his writings. It remains that to this day, although many have claimed that very few traders have truly demonstrated evidence describing a market forecasting proficiency to match that of Gann. So, there hasn't been many traders, if any, who have A, managed to work out Gann's theories, and B, also managed to trade at the same level of success as Gann, provably. So that leads me nicely into Gann and how much money he took out of the market. So Gann was said to have taken over $50 million out of the markets. This was back in the early 1900s. His long trading career, he took this much out, leading to continuing interest in uncovering the secret teachings of his systems. The problem is, though, when Gann died on June 18th, 1955, he left generations of traders and researchers fascinated and intrigued by the vast offerings he had left behind. Gann's system was elaborated across a long history of books and courses, each containing several layers of encoded information, and this is what he was noted for. He left behind loads of work that was fractal, fragmented, coded, not clear, not clear how he did it, not clear what his theories were. Initial exposure to his materials portrays an easy-to-understand teaching of cosmological economics tools. However, further study reveals a more secretive, fragmented approach to teaching outlined through obscure references, phraseologies, calculators, and mysterious charts. So I'm sure you guys have maybe looked into maybe Gann a little bit, maybe kind of come across him and being, what the fuck is going on here? And you're rightly to think that, because a lot of his theories, he had loads of theories, they were either partially explained, not explained at all, inferred to be a certain way, or basically people who've studied Gann have made a best guess on what his theories were. Now, there are a few tools that were worked out on how he did it, but for the most part, a lot of how Gann made that $50 million, which was a huge amount of money back in that time, and how he was so successful with trading success rates are not clear. Which leads me on to my next thing here. So I'm talking about Gann's theories. So Gann's prolific output and broad range of thought has seen the field of Gann theory expand into numerous research streams, ranging from highly advanced subjects such as financial astrology, number theory, gematria, planetary geometry, chemical elements, and the law of vibration, to practical frameworks, which I just mentioned, including time and price squaring and square of 9 calculators. Now, from my own observations and research, because of the details of Gann's theories are undisclosed and his methods are fragmented, whether Gann was genuinely a genius or just very lucky is still up for debate. And I believe that as well. I'm not blindly following Gann or the elements of Gann that can be deciphered. At this point, and sort of 5 years into my sort of learnings of Gann and trying to delve into the information of Gann that I can find, I still believe that he was either really good at selling an idea, or he was genuinely a genius, because he left so much of his stuff, of how he did it, just not clear. Just left when he died, just left it kind of like half explained, and maybe explained to a few people, and they know how it works. We're not sure. However, many have spent a lifetime trying to decipher the obscure and mysterious works of Gann's theories and Gann himself, and have created their own interpretations of his work. And I have done the same. So, looking through all of Gann's works that I can see, the only theory of Gann I have found to be useful in financial markets is the square of 9. Okay, so Gann had a theory called the square of 9, which I'll explain. And from what I have gone through all of Gann's different theories, there's about 20 main ones, which are kind of, you make a best guess of how it works. It's been interpreted by loads of different members of the training community. They make their own expressions of it. But you look at them and you think to yourself, you know what? It doesn't fucking work. or is that I haven't got all the pieces of information to make it work, or I don't understand or have the tools to understand how this can be applied to a traded market. So one of his theories has led me on down this sort of half decade journey, of which has, for me personally, provided me with a crazy return. And like, honestly, the discovery in itself, you kind of, I remember just sort of working it out and thinking to myself, you know what, fucking hell, I felt like a scientist, you know what I mean? And I was sitting there like, this can't be right. It's just ridiculous. How can this be a thing? And it is. And I've been testing this for 5 years, and I'm finally presenting it to you guys today. It's the first time I've actually ever shared my interpretations of Gann and brought it to a more than just myself and a few close friends, where we've been using it to great success. Excuse me. So, the square of 9. So I'll explain the theory as it's known, and then obviously I'll get my elaboration interpretation on it. So, Gann conceived that markets were proportional and symmetrical, and we talked about how he's into maths and how he believes that the world around us is not random, it's mathematical and determined. And moreover, he believed markets were geometrical as opposed to random, as I just mentioned. So geometrical, it's sort of, the square of 9 is quite simply a manual calculator. So think of a calculator that you pick up, type in some numbers. It was basically, back in the early 1900s, a paper calculator. Before they existed, right? You had abacuses and other tools to help you calculate things. Gann created a calculator known as the square of 9. The calculator is a spiral of numbers, starting with the number 1 in the center. The numbers spiral around the center to the number 9, which completes the first cycle or square of numbers around the center, which is why it is called the square of 9. The square of 9 is very important because 9 digits are used to measure everything. So we cannot go beyond 9 without starting to repeat numbers and using a 0. So, 1 to 9, then you've got 10, you have to have a 1 and a 0, 11, 12, 13, 14, if you see what I mean. There are 9 numbers, 9 digits. So, this is the square of 9. In its simplest form, this is exactly what it is. It's just a spiral of numbers, starting with the number 1 in the middle, surrounded by numbers 2 through to 9 to make the first square. And then the second square is the numbers preceding that in order, and it just keeps going and going and going. And obviously, I've only shown you one that goes up to sort of the mid 300s in terms of numbers, but excuse me, it goes on infinity, it goes on forever. So that's basically what the square of 9 looks like. It's just a manual paper calculator. So, how do you use this, and what do we do with it? So that's what we need to infer from this. So, basically, we with the square of 9, Gann believed the market was geometric and not happenstance, which we've just touched on. So, square of 9. A year is a 360-degree movement of the Earth around the Sun and is measured by a similar, though not exact, 365.26 days. So, what Gann did, he divided the square of 9 into segments. So, that thing I've just shown you, the square of 9, he divided it into segments, right? And those segments were of a 360-degree circle to represent time. So just mentioned that 360-degree movement of the Earth is similar, though not exact, to 365 days. To represent time, Gann divided the square of 9 into segments of a 360-degree circle to represent it. These divisions were geometric angles of shapes. Okay, so think of triangles, squares. Think of 8-sided shapes, 6-sided shapes. Basically, that's what he did. He divided it with these geometric angles. Now, the primary divisions of a circle are 90 and 180 degrees, right? Which equate to the primary divisions of a year. 90 degree seasons and 180 degree between opposing solstices and equinoxes. So we mentioned how Gann divided it into time, the square of 9, and used basically geometric angles of shapes to determine this. And using a square, which is what he's done here, the primary divisions, we end up with, just to hash over this, what we were saying about the primary divisions of a year. The vernal equinox is March 21st, thereabouts every year. The summer solstice, June 21st. The autumn equinox is September 23rd, and winter solstice is December 21st. So they're basically equidistant from each other. dividing the year into 4, which means that the main angles that Gann used to divide the square of 9 were 90, 180, 270, and 360 degrees, or a four-sided shape. Okay, so just to sort of break that down, Gann basically took the geometric angle of a four-sided shape, right? Angles of his four-sided shape, and he imposed it over the square of 9 to divide it also relative to the seasons of the year. Okay, so think time, think is how it's dividing this calculator. Right, next up, the next most important angles are 45 degrees, 135, 225, and 315, which are the other 4 angles that you would find in an 8-sided shape. Okay, so when you're looking at the square of 9 using Gann's theory, you basically rank in terms of importance a 4-sided shape's degrees and angles, an 8-sided shape, followed by a 3-sided shape, as I marked here, 120 and 240 degrees, and a 6-sided shape. And they're the only angles not used yet from a 6-sided shape is 60 degrees and 300 degrees. So these basically add on top as angles of division for Gann's square of 9. So now, I'm sure it's a lot of information, but to now show you how it works, I will, on the next slide, give you an example of the square of 9 calculator. So this next square of 9 calculator, I've put on 45-degree geometric divisions in grey. And Gann would use this to work out areas of support and resistance in financial markets. Okay, so here is our square of 9. It's a little smaller. It's not a little smaller. It's exactly the same size as the one I showed you originally, but it's got these grey divisions. Okay, do you see how these are basically coming every 45 degrees? Okay, so I haven't bothered putting on I've put on the 4-sided and the 8-sided shape divisions on Gann's square of 9 here, but I haven't bothered putting on the 3 and 6-sided shapes because they're less relevant, and to avoid getting it too complicated here, I'm not going to put them on. And also, on top of that, the reason for that is this is Gann's theory of the square of 9, and mine takes from this, elaborates on it, and is far different. So we're only going to kind of touch over it and just give you some foundation and the basis of where the information I'm going to share with you comes from. Okay, so next slide. This is how you use it. This is how it works. Okay, so how is the calculation done? On the square of 9, the paper calculator created by Gann to give you support and resistance points on tradable markets. So let's assume we are trading an altcoin and its recent swing low was $23 per coin and it's in an uptrend. So what you do is you basically take in an uptrend the swing low, or in a downtrend the swing high, and you would put that into this calculation and you would find out the next level above if it's an uptrend, or below if it's in a downtrend of relevance to the market. Okay, so what I've done, I've kept the 4 main angles as the to give an example, 90, 180, 270 and 360 degrees. We're only going to do a calculation for 90 and 180 because it's just an example for you guys, and as I say, my theory builds on top of this. Don't have to really pay too much attention to this, but I'm just explaining how Gann's expression of the calculator works, and then we'll move on to mine. So what you do with your $23 swing low price, you take the square root of 23, which is 4.796, add 0.5 for a 90-degree point of resistance in time to get 5.296, and then you put it to the power of 2 and you get 28.047. And then with a 180-degree point of time resistance in Gann's square of 9, you take the square root of 23, which is 4.796 again, add 1 to get 5.796, and then you, to the power of 2, get 33.593. Okay? Now we're going to visualize this. Remember that this calculation for 90 degrees was 28 and obviously some decimals. And this one was 33 and some decimals. Now we go back to the square of 9 calculator. We find 23, which is here. Okay, 23 on the chart. Excuse me, back we go. 23, right? What is 90 degrees round the square of 9 from here? We go along, and we go up, and and you get 28. Okay, you see that? That's 90 degrees round. And what was our number? 28. Okay, and then from 23 to get 180 round, we go up to 28, all the way up here, and over to 34. Okay, so it's not an exact science, but it's close enough. It's somewhere between 33 and 34. We had 33.593. Rounded up is 34. Okay, so 34 is our number. So basically, without having to do the calculation itself, if you had a traded asset where its swing low was 23 and you're looking for points of resistance in time using Gann's theory of the square of 9, and you want to see if you have a 45-degree angle of resistance, which we haven't obviously touched on, but it is still relevant. It's the second most relevant angles of an eight-sided shape. It would first stop at 25 or find resistance there before moving on to 28 at a 90-degree angle of resistance in time, before moving on to the 15 degree. Sorry, bad maths. Where are we? The 135 degree point of resistance at 31 before moving on to the 180 degree resistance at 34. And it just keeps going, and it keeps going round and round and round from that swing low. Now, every point where the market finds a swing low, the calculation has to be done again. Okay, so you can trade against and find resistance points from that swing low. But as soon as the market finds a point of resistance, turns, goes back down, and forms another swing low in your uptrend, the calculation needs to be done again from that new point, that new swing low. Okay, so moving on to an example of the square of 9 shown on a chart that we are familiar with. Right, this is the uni chart. Okay, Uniswap, Unicoin. Right, I'm picking coins that maybe you guys don't trade too often. Just to give you an example of the square of 9 using Gann system. The green points here are the 45-degree angles of resistance. The yellow points are the 90-degree angles of resistance. And the white points are the swing lows. Okay, so you see how the market's come down. This is sort of mid-June last year. It's hit a point here. That point here is 3.6. Okay, that white line. Then moved up, moved back down, formed another swing low at 3.833. Okay, now what we done, or how I've done it, to get the green line on both swing lows and the yellow line on both swing lows, I've used our calculation to show this. Right now, looking at this objectively, without looking at the calculation, can we agree? I think we can, that the market, for some reason, has stopped here. Okay, and you find resistance off here, and it's moved away. And now the price movement down is about 10%. Pretty decent though. And off the 90-degree angle here, we've got, again, pretty much a topping point here and a better, or a bigger, should I say, reaction to the resistance here. Excuse me, lost my voice for a second there. Then markets moved above and then found support on this area here. Okay, this is the 90-degree area of resistance, now turned support from the Gann swing low here. Okay, and then it's moved down. Look at this. It's found support on the 45-degree angle. Okay, before moving under and then retesting it and finding resistance before making another swing low. Then a new calculation is done because we have our swing low. This area now is still relevant, but it's less relevant because you have a new swing low that almost overrides it. The market then moves back up. We've got a resistance here. That green line, don't forget, is derived from here, hence why on the same angles, same points in time on the chart there. Okay, see? Small pullback, about 5%. But do you see how the market moves above and uses it as a support cluster? Pretty much pinpoint before moving up and then sitting on top of the 90-degree angle derived from 3.833 and using it as a support cluster when the market trades and goes further before coming back down to today where we are right now. That's our price point right now. But do you see how both the 90-degree angle from 3.833 and 3.6 have formed support? They are relevant in time as you move forward, and they always remain relevant from the swing lows. Okay, so the calculation, here it is. As we just did with our Phantom $23 altcoin, we'll do it with a real traded asset, Uni. Uni's recent swing lows were $3.6 on the 10th of the 6th, 23, and 3.833 on the 17th of the 10th, 23. So on the previous slide, before here, where we did the 180-degree angle, I've decided to show you just, because it's a smaller trading zone we're going to do the 45-degree and 90-degree angle. So back when we did the 90-degree angle, we added 0.5. When we did the 180-degree angle, we added 1. For every increment of 45 degrees, we're basically adding 0.25. Okay, so you see here, so 0.25, 0.5, and then 135 degrees would have been 0.75. 180, as we already saw previously on the previous slide, was 1. Okay, and it keeps going as you increase the degrees all the way up to 2. Now, it's the same calculation, but you take the square root of 3.6, which is 1.897 from the first swing low, add 0.25 to get 2.147, and then to put 2.147 to the power of 2, and you get your 4.611, shown on the chart here, 4.611. Okay, that's derived from that swing low using our calculation. Moving on, 90-degree angle from the same $3.6 low. Take the square root of 3.6, which is again 1.897. Add 0.5 to get 2.397, and then 2.397 to the power of 2 gets 5.747, which is our gold line here, our 90-degree resistance formed from the 3.6 swing low. Then the 3.833 swing low on the 17th of October. Again, you take that, you put it into calculator, you get 1.957 when you square root it. You add 0.25 to get 45-degree angle to get 2.207. You put it to the power of 2, you get 4.874, which is our second green point of resistance here, which we talked about just a moment ago. And then finally, we get the 90-degree angle. We take the square root of 3.833, which is 1.957, and add 0.5 to get 2.457, and then you to the power of 2, 2.57 gets you 6.041, shown here. It's that line there. The price is on it at the moment, so it moved down slightly, but it is that 6.041. Okay, so that is how you get those angles, and you can see it's got some relevance, right? It's pretty interesting stuff, considering you've got to remember that this is not derived on anything. There's no prior price action. There's nothing that is determining these levels other than a calculation formed from basically looking at geometric angles and applying them to the price points that have happened and the swing lows and highs of a chart. Okay, cool stuff, right? Pretty mind blowing, but it is limited. Okay, as we can see, Gann's method is somewhat accurate, but it lacks consistency. Okay, so this works for this and here, but it's not pinpoint, is it? We're not seeing we've got a pinpoint there and a pinpoint there, but after the first test it fades through. This one just goes straight through it, goes straight through as well there, but it's not as consistent and accurate as you probably would like. Also, Gann's method is not dynamic. Gann's method is also dynamic, not static, and I'll explain what I mean by that. Dynamic, basically, in Gann's world, is every single traded asset you have to do a constant calculation on the pair as you analyze it. You need to find swing lows and highs, identify the trend, work out which direction, work out where the support and resistance is relative to that point in the market, and then you have to do a recalculation every few months. It's not static. You don't have the same points in the chart every time. You don't have a position that is tradable on every asset. Basically, everything is relevant to each individual chart. Now, through half a decade of my own refinement, I have taken Gann's curve of 9 theory, which I've just shown you, and adapted it to be static, consistent, and accurate. And I've used the calculation between geometric angles and time. I've developed a trading tool that defines support, resistance on every developed market that I have traded it on. Okay, these levels are the same on every chart and are not correlated to prior price action or any other known indicators. Okay, just let that sink in for a second for you guys. So there we have it. We have a calculation between geometric angles and time, creating static, definable price levels of support and resistance on developed markets that are traded, whether that's a crypto market, a stock, or a commodity. These levels work when used and combined with volume to confirm or deny support or resistance as a very high probability trading zone to add to your toolkit. So what I want to do next, I'm going to tab over to a trading view chart, and we're going to look at the ADA USD pair with my levels defined on them, show you how the market reacts to them, how it moves around, and remember that these levels are the same on every chart, and they are not correlated to prior price action in any way, much like most of the other trading tools and theories that you see, including my liquidity theory that we went over at the beginning of the month. This is completely uncorrelated and just uses a calculation between geometric angles and time to give you these levels. Okay, here we are. So I'm going to start this presentation of my levels on Cardano or ADA, more appropriately, from the all-time high and down, and show you how the market reacts and behaves to my static predefined price levels. So obviously, at this time when price was coming up to make the all-time high, we were in price recovery mode. There was no price action here before. Blue sky. So how would you have defined where or where not to sell? Well, that's where my levels come in. So these levels, I traded them at the time, and they were very much a strong resistance and a topping factor for the entire bull market. So what we'll do, we'll ignore the run up here, and we'll start from when we first get some resistance on the all-time high area, and we'll work our way down and along to the present day, and we can view and see how everything develops. So so you've got the price moving up, and we're looking at the volume bars, and then you come to this level here, which is one of my static Gann levels that I created, where you've got quite significant volume on these two bars. On the H4 time frame, by the way, I didn't mention that. This is an H4 chart, surely because, same with liquidity theory, it's the most traded intraday and most looked at intraday time frame that is most accessible to most. I use H6, but I won't be doing on H6 just for the clarity for you guys, so you can see what's going on. But here, so you've got a couple of wicks pretty much pinpoint off this level here, and then a pullback from it. You've got another one of my levels. So all of my levels are color coded with importance, ranking them. But I'll go into that in more detail later. But basically, it's just so I can tell them apart. But every single level here is from my theory derived from the works of Gann on the square of 9. Anyway, so you've got the price moving up. We see the resistance. We see the volume bars here. And then we have a fade down. Huge pullback. About 15% move. Along the way, it's touching off, and I'll zoom in a bit here so we can see it better. It's touching off some of these other Gann blocks and sort of volatile between them, but is acting as points of trading position. And then the market pulls back to the purple here, which it under volume. See these volume bars. It's trying to find support and eventually does before moving back up. Then we have a close to second test, but then a rejection where it's finding support on this Gann block here before finally making the all-time high, which on liquidity theory is a throw of the highs outside liquidity, as well as finding resistance initially on the Gann block, and also secondly here after the overthrow liquidity hunt, a pullback, and then finding resistance on the Gann block before moving down. So that's the all-time high. Okay, high volume here was a tell as well on the overthrow of the outside liquidity, as well as the Gann block supporting the theory. So basically on these two I did trade, and I use both theories combined. So my strategy is using liquidity theory and my static Gann level theory to support a trade ideology, stand voice, with volume. Okay, so price moves away, hits through this level with volume, finds some short-term support on the blue here for wicking against purple. So the volume is to tell when a level is not going to be respected. However, it moves to the yellow under huge volume and white as well, where it's got a pinpoint low on white. Okay, before moving back up, think of it as a swing down, back up to purple, sell point there, back down to gold, and a buy point back up to purple, back down to white. So you see how this is forming an excellent trading range one where you've pretty much got the defined levels of the market as it's moving between A and B on its way down in the downtrend. Back up to white here and blue, where volume is the tell. Again, you see the volume bars of a resistance before moving back down. So you've got huge ranges here of 15%. You've got support on white, under volume, back up to purple, back down. Do you see how it's acting like a magnet for the market as it moves and finds its new direction from the all-time high? Moving down, you've got high volume through gold here, which basically means that this level, as it's closed below and not supported on it, is temporarily not support, or you don't know at this stage, obviously, if it's going to be support again or act as resistance, which it does. So it moves down to white where it finds support, back up to gold. So you're literally playing ping pong here. You can trade these levels using volume as your guide. You pretty much have got some pretty high probability scenarios here. Coming back off of white here and an underthrow test of liquidity there, as well as the support from the Gann block. Moving back up, high volume going through gold, closing above, meaning it's no longer resistance, moving above and basically ranging between the levels. Back down, almost made it here, didn't quite, but it would have probably been a trade you could take, seeing this underthrow closing higher here. You could have probably made an informed decision that it wasn't going to test the Gann block again, but move back up off of liquidity underthrow. Now, moving back up, high volume through gold here, meaning it's no longer resistance, and then acts as support under volume bars underneath. Before wicking up and touching exactly on this block here, before moving back down, onto gold again, support temporarily before finding high volumes to move through, and basically moving down in the trend. Gold's acting as volatile resistance and support before absolute wick off of here. See the pinpoint accuracy of some of these levels, okay? Moving back up, finding resistance again, before finally moving back down, taking out this liquidity there, and also using this Gann as a resistance point. And we're ranging again, and you can trade all of this along the way. Really, honestly, guys, this is a brilliant tool to add to your tool sets. Moving back up off this Gann block, high volume through this potential resistance before finding on even higher volume absolute resistance than the short-term top before moving down. And we have again, the market is magnetized to my levels, moving through like butter on some of them through volume here, and then some temporary support before finding it's no longer support. I'm using as resistance before coming back through and acting as this Gann block as resistance. So it's literally capping the market on the way up and down, on its direction, on its downtrend. We're into the bear market now, obviously, and we're going to just keep moving. So I'm not going to talk in so much detail, but I'm just going to drag the chart out, and you guys can see how these levels are acting as support, resistance, define, almost pinpoint wicks, closing a candle bodies, trading points that you could take. Moving down, still every single level acting like a magnet, still moving, still going. All right, you see this slight deviation there, but it was brought back up. Sold back into. Now that could have been, I don't know, a news-driven event. Not sure. That one's a bit of an anomaly, but generally, most part, this is other than this deviation, acting as the extremes of the market support and resistance on its downtrend. I'll keep going, and I'll let you guys kind of just look at the chart and look at where you would have sold and bought, because defining and talking through every level, because there's so many opportunities, is going to take me quite a long time. So yeah, I'll just drag the chart out. We're now into 2022, the extent of the bear market. You see how the market is basically finding range-bound points where it is defining a short-term bounce in the downtrend before carrying on its journey. See, there's excellent pinpoint, excellent resistance points here, support points here. Look at this again. Boom. Support point here. Some crazy wicks, but this is all magnets for the market. Moving through, going to support, resistance, underneath as resistance before defining it again as support before moving back up. You see this, look at that, magnets. Boom, back through there. Purple, resistance, double tap. Huge fucking opportunity there if you hadn't exited your position at this point. Back up at 124 in the bear market. We've got a combination of Gann and liquidity, overthrow liquidity, and also inside liquidity off of this H4 here. So they're all adding up to make this excellent trading proposition for you. And moving through, again, market resistance off of these levels, support off of here, resistance. And it goes on. And then we've got a real like collapse here with the Luna scenario fiasco, and you kind of see here the levels and they're trying to find support before ultimately finding support off of blue here, using green as almost like a combined resistance and support, moving through it, or coming back to white before moving back up, hitting red, acting as the top, moving back down like magnets. Now, volume's drying up a bit here now because obviously we're deep in the bear market, so these levels have become a little bit clearer, less volatile. You see this, how the market is now almost like glued to these levels without other than this candle here, without much of a deviation at all. Coming back down, moving to the blue, back up to green, back down to blue. Do you see this? It's like magnets. You've got magnets of all these levels. If you're a scalp trader or you're looking for low time frames, you can kill it here, honestly, all year round, all day long. Moving through these levels, back up to green. Look at that pinpoint wick. Blue's a bit messy here, but it does act as support. Moving through, look at that. Oh, off of that green, white, green, green again, green again, green again. Above, now it's in support. You see this? And back down to white. And you've got this whole range. It's come back down to the next one. It's like a magnet. Once it leaves one, it goes to the other. Moving along it like a magnet. Moving along, magnetized to that. Back up with some support clusters here using overthrow. Liquidity theory here as well to sort of, you could combine the two theories as I've mentioned. It just keeps going. Magnets still going. Now we're coming down to a new range. We define the lows here, attempt to hold, but now it's resistance before going back down, finding support. Look at this. Of that support, moves through under high volume. This level is ignored, comes to blue, it's the top, and does 3 tests before going back down, but using purple as the defined low of the range. Now the volume's lower, as I mentioned back in May on this chart. It is so easy to define these ranges. We're coming back down and we're almost at the bear market low. We're going lower. We see these support clusters here before acting as resistance, and support, resistance, support, failed support, breaks down. Where does it go? Next Gann block. And what does it do? Comes down here and acts as support, and that is the absolute bottom of the bear market, right there off gold. Moves back up. This is the trading range from last year now. We're moving higher through from gold into white. Look at this. Oh, wow. Come on. Look at that. Fucking support resistance there. Boom. Back through. Coming back down. Support cluster. Resistance cluster. Tradable. Everything here. Make yourselves a lot of money, guys, just by trusting these levels and working out direction trend based on with volume profiling and also liquidity theories. Look at this. There's a bit of deviation. That was a bit of an anomaly, but it was only temporary. Think of it probably as a weekend bar pattern. There you go. It's on a weekend. That's why. Moving back up. And support, failed support becomes resistance, comes back to the next level. It just keeps going. Trading off of these levels like magnets. Bosh, look at that. Fucking hell. Back up, back down, and back up again. Again, purple's acting support, keeps going. Resistance up here, back down. Support, that was failed under high volume. Remember, volume is when you can tell if a level is not going to be support or resistance if it is under high volume and closes below or above each level. Look at this fucking pinpoint doji there, high volume. Okay, look at this, still going. It's like a magnet now because of the low volume of the bear market. Everything here coming back down, doing a retest on gold after trying to support on white, going straight through under high volume, so ignored, so it comes resistance. High volume again, so it's ignored, comes resistance. Oh, look at this fucking hell, yeah, come on. Support cluster here, back up, resistance. Bosh, straight through here. High volume ignored that candle. Look at that wick. Look at that wick. Oh, and that's the top. Back down again, support clusters, resistance clusters, support clusters. Oh, wow. Back down, all the way back down to gold, where we find ourselves double testing the lows. And look at this. These are the bottoms. These are the lows that were formed in September last year. Bit of a deviation, but otherwise, look at this, guys. If you long this fucking support cluster, which I did, which I know a lot of you did, but not for the same reason I did, it is just absolute bottom buy. It's just free money. Back up. Look at this. There you go. Oh, it was a resistance. Bash through on high volume. Resistance. Bash through again on volume. No longer resistance. Moving up the trend. Look at this. Oh, there we go again. Resistance. Trying to form. Got some overthrow liquidity as well as some inside liquidity blocks here coming in, but it fails to. That was quite fast. Sorry. It fails to resist the market. Moves higher. We've got blue again, and we've been here before. We're going through white as well, but it goes through on volume. See the volume bars. Bosh. Ignored. No longer resistance. Next level is resistance temporarily before finding the intermediate top here. Oh, back down to green. Back up support. Then up here on resistance of red. And back down to green. It's like magnets, guys. Back up to white. Boom. Sell that. Up to here to red. That's a bit of that inside liquidity as well there, as well as the Gann theory. And that's our top from about 2 months ago. Still trading, coming down, trying to support, failed under volume there, straight through resistance. Now this white support, back up resistance, making our way down. You can find the resistance and support, and look at that again, support. And here we are, present day. Okay, that's from the all-time high to now. Sorry if it was a bit fast, but on an H4 time frame, using my theory, combined with as well, when you trade, look at the liquidity theory I told you and use volume as your guide to confirm or deny if a level is going to be resistance or support. If it closes above or a level and it's come up to it on high volume, ignore it, don't short it. If it's coming down on a downtrend to a level and it wicks to it, closes above it, then buy it on high volume because it most likely will turn. Okay? That's the theory. That's the trading style. So basically, I'll talk about in the last sort of month. Excuse me. Moving up, touching here, wicking down, close, under volume relative to the recent volume. That is a sell point there. Down we go. Same here. When it comes to this level, it closes above, but tests it on high volume. It's a buy. So a second test there before moving back up. Okay, it is literally, that is the strategy. That's how you play it. You got up here with this wick, high volume. See the bars, comes up, tests, close below, under high volume. That's a short. Okay, so literally, it's like ping pong. It's like magnetized levels. Honestly, guys, this tool is incredible. It works on not just data, which I've shown it on, but every tradable instrument, every traded market. It is more accurate on markets that are sub $100. Surely because there's so many levels, it gets a bit messy. As you go higher, they get tighter. But the swings here are 10 to 15% down at this price point. When the price is down at 25 cents on ADA, it was like 20% swings. You can make a lot of money. And literally using risk management, volume as your guide, and also combining it with my liquidity theory, it's very hard not to make money. Okay, so this is how it works. And basically now I'm just going to tab back over to the presentation and explain how I'm going to distribute it to everyone. And if you're interested in it, honestly, as you can see here, it is an incredibly unique theory, one that I've derived and created myself, which is based off of nothing other than a conversion from geometrical angles, a calculation between geometrical angles and time. Every single level is in no way relevant to any prior price action on every chart that it trades on. And every chart, although I have only given one example, every chart I've put this on, especially on assets traded under $10 or £10 or wherever you are in the world, whatever is priced in, the market moves like a magnet between all of these levels, just like I've shown you on ADA. Okay? So honestly, guys, I'm not trying to sell anything that's like, I just, for me personally, it's I've made a lot of money from this, and I'm presenting it to you to give it to you as a excellent tool to add to your tool sets that, to my knowledge, isn't really used by many people. I created it myself using a calculation that, to my knowledge, I'm the only person who has. However, you then probably might ask the question, why does it work? It might be because it just happens to be that we, as people who trade the markets, inadvertently trade off of these levels, or maybe higher than this. Maybe I have cracked the Gann system, and whomever is the composite operator and main market makers of markets have been using this system for years, but we didn't know about it. And now I've obviously inadvertently myself cracked it, and it works. Okay. But all of these levels are static. They do not change. They go on every chart and they work. And yeah, I'm probably going on a bit rambling, but basically every single level is literally put up a chart. The levels are on each chart, and the fucking price action of every single asset I've seen with these levels, it moves between them like fucking magnets. Okay. Right. I'm going to tab over now to the presentation, and we can talk about how I'm going to distribute this to you guys. So, how am I going to distribute this? Well, initially, when I joined Jupiter, I was under the original idea that I would distribute this for free, and then I thought after about 3 weeks back, a few guys in the community, I created a meme coin for a bit of fun, so you guys could have something to trade without any rugs or bullshit. And I had an idea. So, as part of offering out all of these levels, the Gann levels, so obviously I'm not going to tell you the formula of how I get the levels, but I'm going to distribute where the levels are. And as I remember, I said they work on every chart, every established chart that's traded in or against fiat monies. It works. So, yeah, my plan is, which will be happening shortly after this video is published, we will be launching a pirate pass, okay, in the pirate community, which we created, which is community run, not just run by me, but obviously I created it, but there's about 10 of us that run it. And we're going to mint 100 NFTs on JPD for 180 each, so nothing crazy. And that 100 each will give holders access to all the static price levels through to $100, which I'll distribute to everyone that buys the pass. As I mentioned previously on the chart, levels above 100 will be added if the community wants them. However, they are quite close. They're not really as broad as levels under $100. So it's a bit messy. Good for a scalp trader, but maybe not for a swing trader. So that's why my theory really only works on assets priced under $100. Well, it works on assets over $100. It's just there isn't a whole lot of space between each level, so you end up with 1 or 2% ranges. Okay. All proceeds from the mint will be used to add liquidity to the pirate coin pool and generate yield for the project. So I will not personally benefit from this. It's not for me. The monies is meant towards this community-run project that we have, and that I thought, well, let's have some fun with it, build it, and see what we can do. So a member of the community created the NFT and the JSON files basically to publish it. But what will happen is, once this has gone on the pool, all of the money generated, whatever that may be, to create liquidity, all ADA yield from trading fees will be distributed monthly to Pirate Pass holders. Okay, so if you buy a pass and you are still holding your pass at the end of the month, AD trading fees that have been generated from the liquidity that we have added to the Pirate Coin pool will be distributed to you in ADA. Any Pirate Coin yield from trading fees will, however, be burned, okay, because we're distributing the ADA because it's not Pirate. If we distribute the Pirate, we kind of fear that it could get sold. So the Pirate is going to be burned, okay, so you'll get all the ADA yield. You can do whatever you want. You can buy more Pirate, you can buy something else. You could put in your bank account. I don't mind, okay? The Pirate yield is going to be burned. And then finally, just a side note, I don't know how much it will be. The secondary market royalties for the JPD from the minting and subsequent sales of the Pirate Pass will be used to buy and burn Pirate. Okay, so it's got two uses. It's got utility in terms of you will have access, which I'll give you. It's a lifetime thing to the static Gann levels that I've just described, and then you also, if you carry on holding the pass, or if you trade it, someone else buys it, whoever holds it at that point at the end of the month will receive any yield from trading fees on the Pirate Coin pool. Okay, so that concludes my video today. I hope it's been an eye-opener. I hope you guys have, added something really interesting to your tool belts. And if you want access to all of the Gann levels up to $100, then buy a Pirate Pass and it will be distributed in due course through the Pirate Discord. Okay, so thanks so much for your time checking in with me tonight, and I hope you've learned and found out some really interesting stuff. And hopefully we can all use it to our advantage to make ourselves monies in the markets and build and grow ourselves going forward. All right, all the best.